Hi, welcome to a new video. Today I'll show you the best entry model, which allows you to enter with exact precision, waiting for specific confirmations while using an objective logic, where you know what you're doing at all times. You will never be lost again or second guessing while you're trading if you should enter or you should wait. We'll be looking at specific candles and certain highs and lows, aligning all the time frames together in harmonious sequence. When you wait for the right confirmations and you align yourself with a higher time frame, entering trades with practically zero drawdown and great risk reward is not just possible, it is inevitable. You also know that I always like to show you real examples of real trades I've taken. So today we'll study the entry model with these two beautiful trades that I took last week. One was on EuroUSD that I took a long, risking $500, and I made $7,600 in a few hours with zero drawdown. The other was on gold that I took a short between Thursday and Friday. And again, I entered with zero drawdown, risking only $300, and I made $4,000 while I was sleeping. I entered the short at the end of New York on Thursday, and I closed on Friday on the morning as soon as I woke up. And as always, all of the trades were called live in real time and predicted before they happened, hours before, on my mentorship Discord, which we'll look at that as well because it's incredible to see. You know, it's very beautiful once you see mastery in real time, and it makes you fall in love with the game and fall in love with trading, which is what I'm trying to show you. And I'm here sharing my passion and love and trying to make you a master. But you can fake profits, you can fake profit payouts, but you cannot fake calling the market live every day, every week, every month. There is a difference between a real trader and a pretender. And here's also one of my best students, Devarsh, from Melbourne, Australia, that he was telling me that the past 10 trades that he took, he had zero drawdown. And I wanted to tell you that this is not luck, you know. This mastery of three things: of yourself, that is your emotions, your psychology, your mindset when you're trading, your discipline outside of the charts and inside of the charts, which aligns with the way that you live your life. Mastery of your strategy, that is the second thing. And mastery of risk management. Master these three and you're profitable. For those of you who don't know me, my name is Moises Altayo, and I've made over $1 million trading at 23. This is gonna be my last video at 23 because I turned 24 this Friday, 4th of July, Independence Day in America. And yeah, I'm kind of sad, you know, last video 23, but I'm looking forward towards the future. As Patrick David loves to say, the future looks bright, and looks brighter for those who are doing the work and doing good into the world. You will certainly reap great rewards in due time. And I started this channel to share the real truth about how the markets really work and show you how to trade the right way in order to build long-term wealth. I also have the best mentorship in the industry, which you can apply with the first link on the description below. And now let's start with this incredibly valuable video. We will start with the first trade in EuroUSD, and then we'll do the one on gold. You can see also that I've put my chart in replay, so I put it at the Friday close of last week, 27th of June. So it's not annoying, you know, the current price action. But when we are trading Forex, when I'm trading EU, which was the trade, you know that I put all my focus on DXY. Obviously, you also want to pay attention to the others. But if you know where DXY is going, you're never lost. You always have understanding and you're never left uncertain. And a lot of people ask me, how do I know if this trade is high probability? If you're doubting, if you don't have a clear direction of where price is going, you don't have a clear plan, stay away. That means it's low probability. You either wait for more information or you require more study to see what I can see, right? And if you remember the last video that I did last week, I was expecting bullish dollar to this high exactly. And I wanted to see a true breakout here of this high, but we did a false breakout. And then we rejected on Monday, all the way down. And on Tuesday, we opened with this gap down here. Moises, why are you explaining this? What does this have to do with the entries? Well, in order to enter a trade, you know that there are always three things that we must know. That is the plan, the narrative, and that's what I'm doing now, right? I'm understanding what's going on in the chart. The second is your entry, which is what we're going to focus today. When do you enter? Why do you enter? What is the entry model? What specific things do you look for? And the third one is your target. Where do you take profit? Where do you close the trade? Now, as soon as we saw this rejection, right, if you look at the daily as well, it's a pretty big candle. And then we open with the gap, and I didn't trade any of this. Here, I was just observing because it was when we had the war with Iran and Israel, and Trump was signing the peace deal. So it was quite hard to trade this move because we opened with a gap up and then we reversed the whole move in, if you look here at Euro or British Pound, we opened the week with 50 pips gap, we swept the lows and then straight up. Then on Tuesday, I didn't execute either, I was just observing, I didn't take anything, there wasn't anything high probability. And Wednesday is when I execute. And I took the trade during FOMC on Wednesday, which was at 2 p.m. Here, 2 p.m. FOMC. We've looked at FOMC before in the channel, and we know that it's a two-stage delivery. We got the statement at 2 p.m. that brings volatility, and then more at 2:30 p.m. with the press conference. You always need to keep in mind that when you're trading FOMC. So then with this drop, I was confident that we're going for the yearly low. Right, we made this low here, the 21st of April. Then we took it again on June. And now with this move and the price action we got on Tuesday, I was expecting the week to continue to the downside, right? To take the yearly low. Knowing this then, I was looking for a short. So what will be a good place to short? I was looking at two things. Since price was heavy on the downside, my first thing that I was looking was this, which was the high of the 4-hour candle range. Another thing I had in mind was previous day high, right? I know that a lot of people look at gaps, right? And all those guys looking at gaps, which is also an inverse FBG here, guess what happened? We'll see the same in gold. We take the 4-hour candle range high and we go. And everyone is waiting for the gap. And we never get them. The market makers always move price to their desired objective, which is this, until everyone who wants to be on that move is either not in the move, is either too afraid to enter because they've been stopped. Let's say they short here and they get stopped. They short again and they get stopped. Or they are in the wrong side of the market, meaning maybe they are long expecting to touch the gap. So let's go into the lower time frames and look more in detail for the entry and everything I did. When we're here on the 1 hour, there's nothing much to work on besides this key candle, which is confirmed here. However, the entry is quite late, right? If we enter here, and my entry is up here. So let's go even deeper into the 15 and 5 minutes. But one interesting thing that I want you to pay attention is that you see that I'm aligning the weekly candle, the monthly, the yearly low, the 3 months, that is the quarterly chart, down to the 1 minute, the 5, the 15, the 4 hour. I'm putting everything together into this harmonious sequence. And then once I'm entering on the lower time frame, I'm taking into account everything that I'm seeing. With that I mean the 1 hour open, high, low, and close, the 4 hour candle open, all of that I'm taking into account down to the 5 minutes. Here on the 15 minute, the main thing that you want to pay attention to is at the key swing. Which is the key swing? It's this one specifically. So we need to keep in mind that this is the 15 key swing. And we will know that when we break this truly, we are certain that we're going lower, that we're absolutely correct, and that this is the high. Before that, you can be confident as long as on the lower time frames on the 5 minute, we're showing the signs, which is what we're gonna look now. Right? But when we break this truly, this 15 key swing, you're confident that you're right and you're chilling. On the 5 minute, the key swing is not this one, it's this one, this specific low right here that starts the move digging into the key level. What is this one then? This one's the one on the 1 minute. You can see it here perfectly. We dig into it, we're ranging, and as soon as we break this truly, I want price to stay below this. Now this entry right here is the most risky one, right? Because you're basing it on the 1 minute without even having confirmed that the 5 minute key swing is broken truly. So when you're entering here, you're taking a risk. It's a calculated risk, right? Because you're not gambling, you're using an objective logic. We've created the 1 minute key swing, then we break it truly, meaning that now this is a breaker. And if price is to continue lower, we must hold this. Another factor to consider is that this was happening at 9 a.m. New York, which is one of the most important times to trade. It's the opening of the new 4 hour candle on EuroUSD. And it's one of the most important candles here at 9 when it starts. So when we form a high here, I trust it far more than if we form a high at 7, for example, 7 a.m. Always when I'm talking of time, I'm talking in New York time. Your chart should be in New York time. In the settings, you can put it. Let's go to the 5 minute now. And you can see that here we dig into the key swing, right? However, we don't break it truly yet. We do a false breakout. We get a candle range here. We retrace into the 1 minute key swing, which is now a breaker, right? And then we reject. And here specifically, in this candle, not this one, right? Because a lot of people, they see this candle and say, oh, it's a large expansion. So now this low is broken truly. Displacement, right? As ICT says. No, it's not like that. That is not precision, that is subjective. Right? Now, determining if we're doing a true breakout or not is the difference between being profitable and not. It's one of the most essential concepts and one that I've mastered. That's why I can always enter with confirmation, with ease, because I know what's coming next based on the current price action. And the true breakout is confirmed with this candle. I'm not going to go too deep now into this because it will take me 1 hour for you to explain it properly, because there are a lot of intricacies and details to elaborate. And also I want to keep it private because it's one of my own concepts. I just keep it private for my students on the mentorship. I don't like to give everything for free. Since we've broken this truly, this now is a breaker, meaning now I'm more confident in this. When we retrace here and I see this rejection and we close below this, I'm confident that this will hold, right? We also hold it here, the 1 minute breaker, and now we hold the 5 minute. In addition, that I didn't mention it earlier, when we got this move here, We touch the 15-minute key swing. Again, false breakout here. We close above this. And we retrace. To where? 50% of the breaker. If this doesn't hold, we'll have taken this high. But it never happened. We touch it and we close below this. And as soon as I see this, I'm confident that at least we're going to this low. And then if we break this truly, which is what happened, I'm confident we're going to my target. And exactly here, after this, when this new candle opens, is my entry. I can show you now in depth my entry, like with the screenshots and how I call everything live. But before that, let's look at EU as well, so you can see it there. The first thing that I want you to observe is that here the low, we don't dig too well on it. This is not the best sign because usually I like to see a good dig into the liquidity. However, look at DXY. Is this a good dig? Of course. This is known as SMT, Smart Money Technique, Smart Money Tool, and it's the correlation between the assets. You can also look at British Pound. And now I want you to observe here, again, the same thing that happens. What is this? This is a 1 hour key swing. We have the 15 one, and then the one on the 5 minute, which is this one, which we break truly, not here, after this candle closes. And since we've broken truly, now this is a breaker, and I expect this to hold. And observe that the same thing happens. We form the breaker, we do a false breakout here of the 15-minute key swing. We retrace. We don't touch it. We have an FVG here that we dig very lightly. But again, SMT is not just with highs, with liquidities and highs and lows. It's also with key levels, because at the end, this FVG on the 1 minute is a low. We retrace and we expand here, touching the 1 hour key swing and doing a false breakout. However, what has happened with this move? Now, look at it. What has happened with these two candles? We've done a true breakout of the 15-minute key swing. We bounce from the 50%, FVG here as extra. We close off the candle that digs into the key level. And as soon as I see this, new candle opens, I'm in. Here's my entry. Now look at what happens next. Zero drawdown. Straight up. Straight up. We take the high of the year and we continue up the whole day. Now let me show you on Discord how I call all of this live, right? It's very nice to see it here. But what about seeing it live? Isn't that even crazier, right? Because I do this every day. You can see here 25 of June 2025. This was 1:41 p.m. my time on Wednesday, which is just before New York Open. So this in New York time, this is 7:41 a.m. This is at 10:32 New York time. And here's where I say we need to hold the 5-minute breaker for this to play out. If we hold it, I believe we're taking the yearly low. What we're seeing, the 5-minute breaker here, this is the 15 key swing. We get it. And here you can see my entry now. Where I told you, at this candle, we close above it. As soon as we close, I'm in 10 lots. Stop loss at this low that we retrace into the 15-minute breaker, remember? And on the XY on the 5-minute here, on this one. If I'm right, this is to hold. We should not return here and start ranging and taking this high. If not, I'm wrong in my plan. That's why my stop loss is there at the real invalidation. You can see it's 5 pips, so I'm risking $500 with 10 lots. And from here, we never return back. Here I said also that Powell was speaking, right? Because he might announce something in the interest rate, so it's important to be aware of all these things. We're now at the key swing. Once we break it truly, what I told you, we can be confident we're going. Here, right? All life. You can see the 4-hour candle range high as well. Yearly low, there is the target. Beauty. In a few hours, $2,000 up. Here I share this because we hit the 50% of the 4-hour candle range, which is an important level to pay attention to. And you can expect a range to form or a retracement. So that's why I share it here. Reject the high. We hit it now with a new 4-hour candle opening. That's why you also need to be aware of it. And then we continue down easy here. Here I said I'm holding until the yearly low on the XY. I had a conversation as well with my best friend Roman. If you remember on the last video that he was on that trade on gold, on Monday he was up $70,000. I can show you now. You can see it here. He was up 70K on Monday, but then when Trump announced the ceasefire, gold started dropping, so he ended up closing for $30,000 in profit. Remember that I wanted to do a YouTube video with him when we hit the target, which was like a 200K, 300K trade. But he's not going to be coming to the channel. I'm sorry. I'll try to bring him another day. Like maybe we can review a trade together or talk about psychology, which is very important. But he's one of the best traders I know. And it's amazing to have these connections, you know. He's my best friend as well. So he's an absolute G. But he told me that we're continuing to 96.50 on the XY if we break the yearly low truly. So that number stuck with me, you know, and I was like, okay, if we break this low, I would like to hold until 96.50. Right here we talk more stuff. We continue here. This is 8:30 for me p.m. Still holding will likely be a $10,000 trade if we expand below the yearly low on the XY. Right here I said, you know, what I'm going to tell you now as well, like I'm not flexing the profits here. I'm just flexing that I call it live, and it's so cool to see it, right? Like I show exactly when I enter, and a few hours later, I'm up $7,000. And everything with precision and with logic, not gambling, right? Which is important as well. Only risking $500. Now, imagine if I risk $1,000. That will be 20 lots. I'll be now up $14,000, right? I was saying, I think I'm closing now before sleep. It was like 2 a.m. for me, so I was super tired. And finally here, I decided to close at 2:12 a.m. my time. You can see everything here. Here, this is a story for another day, but it was a trade that I took here that I should have closed. I was up, but then I decided to hold it longer than, and I ended up taking the L before that trade. And you can see it here, $7,600. $300 in swap because I held the trade between Wednesday and Thursday, and Wednesday has the highest swap. And I went to sleep. One thing you may say to yourself is, oh, why wouldn't you hold longer, right? Because if I had held the trade from my entry, which is around here, to the absolute high, is 153 pips. So with 10 lots, that will be like $15,000 in profit. Obviously, you will never close at the absolute high, but you will close around this range. Here is New York, so I will have likely closed here on Friday, expecting the high of the week to form. So it will be around $15,000. But why did I close it? Because if you look at DXY, we hit my target, which was the yearly low, and this is no random level, right? This is a yearly low. It's an important place. And we did this massive gap, and I close around here. So if I'm in this trade, I will need to stay up all night monitoring price to make sure that we're doing a false breakout here, that we don't show any signs of a low. And we never form a low and we continue dropping, right? Which if I was in the charts, I would have held. However, I wanted to prioritize my health. Like, I've made so much money and I'm making a lot of money every week. So I would rather sleep than staying awake all night, even if I had to make $15,000, you know? And yeah, then we kept dropping. We never form a low. And then we finish the week ranging. Because imagine that I hold the trade, right? Because you may be, oh, like, you're stupid. Why wouldn't you hold if you can make $15,000 if you know we're going lower? Well, I don't know when I'm live. So what if I go to sleep here and then here we reverse and I wake up and we're up here? I go from $8,000 in profit to 4,000. I didn't want to do that, so I decided to close. And this is the trade on Euro. Absolute banger. Very beautiful and very precise. Zero drawdown. Minimum risk, which is $500, is nothing. And now let's go into gold, which this one is, I would say it's even crazier. Like the precision here is even more crazy. I love this trade. The first thing, what I was seeing, it was this. We had this weekly range right here. We close inside. And I have here weekly candle range low. The 50%, it was here at the open. And on Monday, with the news of the ceasefire of the war between Iran and Israel, we got the drop, right? Very similar to DXY. As soon as we do the true breakout of the 50% here, I say, okay, we're going to the low. What else we have at the low that I'm very confident we're coming here? This is the 50% of this price leg from this low that we made to this high. You can see it here. Remember also that here is when I took that trade on gold. I think it was this move. The long that I made $12,000. It's very on the channel. You can watch it. And the 50% of every price leg, we will always touch it. So this is not just the weekly candle range low. It's also the 50% liquidity, which is even better. So I'm very confident that we're coming here for the week. And now look what happens here, which is a very common pattern that it happens so many times. And these are the highest probability trades that you will ever take, which is we have a clear target, like right now. And we front run the real target, which is this, inducing more people to get into positions. So people here start buying. People, they get scared and they close their shorts until we're into a random level, as usual, for our candle range high, which look again here. What do we have? The gap. Everyone waiting for the gap, it never comes. It comes the 4-hour candle range high. Right? We induce people in more positions before we get the real move into the key level. And this is the trade I got, this whole move. So let's study it in detail because it's so cool. It's amazing. What is the first thing that we see here? Is that we fall short of the level and we form a candle range here. Then here, false breaker of this low. We close again inside of this. Right? All this. You can see it's not very certain, the close, but this, I consider this as closing inside. We go to the 50% right here. We retrace into the breaker of the 15 minutes. And then we go to the high. And here we break it falsely. And again, the signature, I enter here. $300 I'm risking at the absolute high and straight down. So how did I do that? Let's see it. Let's go into the lower time frames. You can see here on the 15, key candle, true breakout of the key swing, breaker, so clean, like, oh my God, like this is so clean. And here, another key candle, we close above it, break it truly, and we go up. range at the 50%, what I was telling you earlier, retracement into the key level and expand to the high. We take it, and now we got this move. Okay, we reject. Here we got news at 8:30, and we touch the key swing. Now here on Sunday in the mentorship live, I was asking my students, is this a true breakout of this low? This candle right here, is this a true breakout or not? What will you say? Now, you're watching the video, do you think this is a true breakout of this low, yes or no? Because the answer of this will make you more confident, right? If this is a true breakout, you'll be much more confident in taking this trade. If it's not, you'll be less. I'm not going to tell you the answer. That's for just my students to know. But I want you to think about it and study it. So what happened here? We go down with a false breakout of this. We never break truly below this low. So what happens? We go to the 50%, we break it truly, and now we go to the high. This is what you see here, 15 candle range high. Consider a lot of things here. I just have all this for the video. Again, when I'm trading, I have very little things. Not only that, right? Not only this the 15 candle range high, but it's also the 4-hour candle range 50% that we just formed. This one that you see right here, 50%. Not only that, but it's also the 1-hour 50%. So you can see that everything is lining up here, 1 hour, all in here, and it's also the 50% of this price leg. It's also here. So everything is lining up to have a very humble key level. So now let's go into the lower time frames. What happens when we get there? How do I know that we form a high there? How do I enter at the absolute high, what we did earlier? The 15-minute key candle, we take the high, get back into the range, and the 5-minute key candle is the 1-minute key swing. If we go to the 1 minute, what do we see? Key swing, we dig into it, the 15-minute key candle high, we break it truly, and look how we hold it. Is this luck? This precision, look at all these candles. And this is also happening at the New York PM session. We dig into the 5-minute key swing and we take the low of the key candle, but we never close below it. We never close above this. We hold the 1-minute key swing, and now we do a true breakout. Here we do a true breakout, and now this becomes a breaker. And you can see that we never even retrace to it, meaning price is heavy to the downside. We also close below the key candle, which we also don't even touch. My entry is here. I can show you now. I think it's here or one of these. I think it's here, one of these. I enter knowing that we'll form a range because it's the end of the day, so I'm not expecting an expansion, you know? But I wanted to be in, you know, I really like this. So I decided to take the risk, and my stop loss was here at the 1-minute key swing. I expect this to hold. So I had my stop loss here, entry here, we range, and boom. Open with a gap. I was in a call with one of my one-to-one students, and I remember it was $1,000 in profit when I went to sleep. And then I woke up and we're here at the lows. And I was up $4,000 on Friday morning, and I closed the trade. Incredible precision from all of this, right? The 15 CR, the 50% of this, which is very important, the 50%, and most people neglect, to down to the lower time frames, everything I'm doing. I'm going to show you also in the Discord how because I was joking a bit with this trade as well, but it was super cool. Look what I say. This is Thursday before New York, between London and New York. And I say, going lower, if there's a good opportunity, I would like to short it into the weekly candle range low and the 50% of the price leg. This is the 4-hour candle range high. You can see here, I'm hinting that we might be forming the high here. And now here I say it, in play. And I have the key swing mark. I remember this is what we had on the chart. All this, then I took a short here at this low because I was expecting to continue lower. However, as soon as I saw that we refused to continue at 9 a.m. New York, and that we're forming this candle range on the 15-minute, you can see I'm hinting it here. I'm predicting it. I closed for the loss, which the loss is nothing. It was $200. Right here I say predicting random levels as usual, right? This is precision. It's not the FBG, it's this. And then I took another short, expecting this to hold, but I ended up closing at break-even. Is what I have here. Update. I was in the dentist, so I could not update, but I closed the short at break-even, and I have not taken any other trade today, just ranging. I will still look for the short on gold to the weekly candle range low. And look at this, because this is exactly what happened, right? It's all predicted before it happens. You can see here the chart, how I'm showing it. The 50% here is when we're forming the high. You see it, this is the absolute high, these screenshots. And I say, if we do a false breakout of the 15-minute candle range high, we will drop. If we break it truly, we're going higher to reject later. You can see that is also the new 4-hour candle opening, and we just hit the 50% of the new 4-hour candle range, which aligns exactly with the 1-hour candle range 50% and the high on the 15. Very key level. If we show signs of forming a high, I will short. And it's exactly what happened. Here's when we had the open. But I shared the trade here. I was joking open conversation when I was in the trade. You can see here the watch. This watch I gifted to my dad. Here, so I said at night, you know, here. Anyway, I'm retired soon. You can see here the entry and everything, $1 up. And then I put 100x return, African traders in disbelief. Here we're just joking.
There is no other God but Jesus Christ. There is no other judge but Jesus Christ.
And then here, I woke up and $4,000, and then I went shopping and golf with my dad and piano lesson. So it was a great Friday, you know, wake up, $4,000 and do cool shit. This was funny. You can see it here when I close. And what a beauty. And we'll finish the video here. I really hope that it was super valuable to you and that it helped you improve and become a better trader and a greater man. Remember that you can apply for my mentorship below. If you want to be a real trader, if you want mastery, I will make you a master. I'm not just building a great network of successful traders here, which to me is very important, because when you're surrounded by great traders, you find opportunities that you might miss, right? I share all my trades here live, but then there are opportunities that some of my best students share, like Devarsh, Dylan. I have great people here that they're bringing trades to me and to everyone, Roman, and that is super important. But of course, my objective is to make you a master And if you resonate with my concepts, if you like everything I say, I'm confident it will be the best decision of your life. You can be making 10K a week, 50K months, 100K and more as you scale your account. Like I have friends making 250K, 500K a month with their personal account, trading with millions. And it is possible, you know. Sometimes at the beginning, people, they never see it, so they believe it's not possible. But with the right knowledge, you can do anything. So yeah, if you would like to apply, you can go to the link on the description below and watch the video on my website. It's 1 hour and 21 minutes. But I like to do things in detail. You know, I'm a perfectionist, so I focus on quality and bringing real value. So watch it entirely. And if you want to work with me, apply. And we'll meet one-to-one. I'll get to know you. And if you're good, if you're a quality individual, I will allow you inside. So yeah, thank you very much, everyone. Thank you for the support, for all the growth. Give likes, subscribe, and do all the things that supports the channel. And I'll see you very soon in the upcoming videos. Bye bye.